Okay, Assalamualaikum warahmatullahi wabarakatuh. Today we are joined by an eminent Sharia scholar. um, I'll let Dr. Ziyaad share a little bit about his background, but Alhamdulillah, Dr. Ziyaad is here with us. And today we're going to be exploring this hot or trending topic of cryptocurrencies. We're going to explore a little bit into the understanding of what cryptocurrency is, especially from the Islamic perspective. And from there, we're also going to explore what are some of the factors or some of the features or some of the attributes of cryptocurrency that makes it an interesting opportunity or maybe a threat to the Muslim world or to the Islamic economy, to Muslims in general, and even humanity. So we have two camps: people who swear that this is the future, this is what will democratize finance, this is what will give us power back into our own hands, and so on and so forth. And then there's the other camp that believes that this is something dangerous, evil, scary, unknown, and something we should resist. So we'll explore as we go on, but I've spoken too much already. Today we're here to listen to Dr. Ziyaad. Assalamualaikum, Dr. Ziyaad. Thank you for joining us.
Wa alaikum salam. Wa alaikum salam wa
Happy
rahmatullahi wa barakatuh.
you give me time to be here.
Jazakumullah khair.
We will start with a brief introduction.
Brief introduction. First of all, it's an honor to be here and to speak to the listeners and the viewers. I'm actually South African and spent now about 6 years in Malaysia. Alhamdulillah, had opportunity to experience Islamic banking and finance all the way back in the late 90s and early 2000s. Been involved in investments and fund management at an early age. And then being part of a bank, Al Baraka Bank, which is a large banking group in South Africa, heading up their marketing and their product development for a few years. But then venturing out into consultancy for Islamic finance and helping countries, start up Islamic finance from the infancy stage up to, a kind of a maturity stage where you find them now. So Alhamdulillah, we've had a fair bit of experience in helping countries in Africa, Nigeria, Ethiopia, Tanzania, Kenya, Mauritius, and then up in the Maldives as well. Of course, just what's taken place right now is the Global Islamic Economic Summit. And the GIES was was for the first time, actually had taken place way back in the early 2000s. So late 90s, early 2000s. I had the opportunity of attending the very first one and presenting there on the role of media and Islamic finance. And then the second one in Switzerland again. And of course, at that time, Taqi Othmani was already involved in Islamic finance and presenting at those very conferences. But there was a very small group of professionals at that stage. So the amount of talk on Islamic finance was quite limited. And usually the people that were exposing us to legal aspects of Islamic finance were coming from different parts of the world and not necessarily Muslim, not necessarily of any specific religious denomination, but very knowledgeable on the aspect. So from that is a brief background, of course, coming from a Sharia background, pure Sharia background, classical Sharia background, and also a conventional finance background from South Africa, Egypt, and Jordan. Alhamdulillah.
Alhamdulillah. Thank you for the introduction. And what we'll do maybe for the benefit of those who have joined us today and those who will be watching this video as it's recorded, shall we go through maybe some of the basics first? Because I understand that there are different levels of understanding. So maybe if we can start with your presentation. And inshallah, if you don't mind, I'll interrupt you here and there to ask you certain questions. What we will try to do is, inshallah, we want to create as much understanding as possible on this topic, as well as provide different perspectives.
Yes, inshallah, of course, definitely.
Inshallah. All right. So we'll switch to the presentation. Okay.
All right. Bismillah ar-Rahman ar-Rahim. Alhamdulillah. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala Sayyidil Mursaleen. Sayyidina Muhammad wa ala alihi wa ashabihi ajma'in. Ma ba'd. Allahumma aftah alayna bi hikmatika wa anshur alayna bi rahmatika ya dhal jalali wal ikram. We begin this brief discussion, of course, with regards to the presentation. It'll just be probably a few minutes, and then we can open up to further discussion. And I'm keen to hear Brother Umar's views as well on this issue. Cryptocurrency, I'm not going to spend too much of time on what exactly is cryptocurrency, except for the fact that crypto and currency, best to divide the two words. Crypto meaning something secret, some puzzle, some code, something to be solved.
Yep.
And then currency, we all know, is exactly what we use as a medium of exchange. Interestingly, the conventional definition of currency is exactly that, a medium of exchange that is recognized by the community as such. So from an Islamic perspective, we hold on to this definition very carefully. We say it is actually a medium of exchange. Now, one might think that, what's the issue? Conventional Islamic, okay, fine, you're saying the same thing. But interestingly, from a conventional perspective, you'll find that currency has taken on a lot more attributes than was the original definition. From an Islamic perspective, we say it is a medium of exchange, hence money in itself cannot have a rentable value.
Okay.
Now, rent in its essence of an asset is permissible, but when you're renting money, that rent is now riba. So a very simplistic difference between conventional and Islamic is the fact that money in itself cannot be rented in Islam.
You cannot earn for money.
So you cannot rent money.
You cannot rent money. Okay.
You can rent the result of money, meaning what money can actually purchase.
All right.
So money can purchase a building and you can rent out the building.
Do you mean money in itself cannot earn income in that form?
So, and the famous saying of Aristotle, money does not beget money. And if you look at it from an Islamic perspective, we are saying we go back to the original definition of what conventional logic says money is. Money, currency, is just that medium of exchange that is recognized by communities. The problem is that the community has evolved into utilizing money as the underlying asset and then renting that underlying asset and creating money simply from that money. And that's where Islam says, hold on, that's not exactly what we agree with. You can take that money and convert it into a legitimate asset and do what you like with that asset. You can sell that asset, you can rent that asset, you can construct that asset, and now you are in a legitimate transaction. But as long as you maintain money in itself, now that is just seen as the medium of exchange.
Sure.
Okay, so currency now can be debated into what is really currency. You'll find that legal scholars and some Islamic scholars as well say currency is legal tender. Now, from an Islamic perspective, currency as legal tender has never seen national boundaries. If you think about it.
You mean in the early days?
In the early days, we've had gold, we have had silver, and then very quickly, by the 10th century, we've realized that there is a finite amount of gold available and silver. And if we continue in gold and silver and only maintain the supply and demand value of these coins, then what will happen is the wealthy of the market, of the nation, will actually hold back the gold and artificially increase its price and then use that as the commodity. So in order to rectify that scenario, a new currency was introduced called the fil. The fil was a copper coin. So you find that the Islamic Empire was dealing with a number of different countries and groups, and they had to deal in a number of different currencies as well. So ultimately, you had to adapt and evolve to the scenario. There was no religious sanctity on exactly what a gold coin was in terms of an Islamic perspective. The fact that it was used as a medium of exchange that was recognized through social concurrence, that was sufficient. But the point was what it could purchase and not the fact that it had value in itself that could be rented. That will not be valid. So the currency that was used in the past, and of course the Muslims were learning in the 7th century from the Romans, because the Romans used a coin and the Persians used a coin. The Romans used a coin called the denarius as the currency, and the Persians used the dirham as a coin. And we simply adopted the gold coin from the Romans. We didn't call it the denarius, we called it the dinar. But in the time of Sayyidina Umar radiallahu anh, in the second Khilafah, we actually took that coin and very precisely measured the weight of that coin. So now we had a precise value that was assigned to that gold one single dinar. So you could not have people that could add different metals to that coin and make it of a different value and of a different weight. So now it created a standardization, and all these points are relevant when we determine whether Bitcoin or other cryptocurrencies are legitimate.
So these are all leading up to the context.
All leading up.
Yes. Yes.
So we find that now what Islam has done is very clearly prescribed how these coins should be dealt with. The weight of these coins now become relevant, and now as a medium of exchange, they are used to purchase goods and services. And similarly, we know the famous hadith of the Prophet ﷺ when he is asked about dealing in silver and gold, meaning I pay in gold and I receive my change in silver.
Yes.
So we know that the Prophet ﷺ has permitted this type of transaction. The only restriction was that it must be done at spot. So we keep that in mind as we go along.
So it must be at the same time.
It must be done at the same time. Okay, so no deferment on it. All right. So we now know what crypto is. It's really solving a logic puzzle or some sort of secret code. And currency, a currency that is actually based on a puzzle. A currency that is based on a puzzle. So now we move forward very quickly. We realize that cryptocurrency has to have a very stable and very safe ledger. A record, a place where we can record such that Omar has X amount of cryptocurrency and the whole world knows that he has the right to deal in this because he actually owns it. So how do we determine that? Now comes in the actual technology, the blockchain.
Yep.
Now, we can talk a lot about blockchain. I'm not going to spend too much time on blockchain. We do know, or we should know, that blockchain is just a decentralized ledger at this stage. It records the fact that you actually own that cryptocurrency, and it adds it as a node to the infinite value of the ledger, such that anyone can download the ledger and be aware of exactly what is available on the ledger through tokens, through some sort of encrypted code. How you earn that currency, as Bitcoin and many of the other coins work, is that you earn it by solving a puzzle, hence cryptocurrency. Once you solve the puzzle, like in the case of Bitcoin, Bitcoin has a particular puzzle, and that's a dash that is identified through something called an SHA-256 algorithm. Once we identify that, the person who has identified that wins. He gets a reward, and he's paid through Bitcoin. Okay, so other currencies work in a similar methodology. So yes, the cryptocurrency is stored on the blockchain, and that gives you the verification that you actually own that currency. Okay, let's move on very quickly to the next slide. So a snapshot of the basics. A wants to send money to B. The transaction is represented on a block, okay, so-called virtual block. And that transaction is now broadcasted to a network of nodes. So it gets logged on to a node, and there needs to be a group of people that look at this and verify that it is truly a part of the blockchain. That means you did own it to start off with, and you could actually transfer it at the end. Right. So the people on the blockchain, or what we call the miners, actually verify the fact that this is true.
Okay. Can I pause you for?
Go ahead.
So just in case some people are not familiar with this, the explanation that's being given right now by a doctor is the underlying technology, the mechanism behind the technology, correct?
Correct.
So the user of the blockchain or the buyer of the cryptocurrency is not involved in this process.
Not at all.
It's all behind the scenes.
All behind the scenes.
All right. And these people who do these things are called miners.
They are called miners.
All right.
When we, and why we go through this is because when we provide Sharia verdicts, when we determine whether something is legitimate or not legitimate, then we have to investigate its underlying transaction, its underlying methodology and functionality.
Where it came from, how it started.
Where it came from. So if you look at a Sharia scholar, his job is to deconstruct a transaction. He must have the ability to separate it. And you know, today in augmented reality, when we study rocket engines, then if you go to Singapore University Polytechnic, you'll actually be able to draw out every part of the rocket engine virtually. The idea is to take apart every transaction and assess each part of it, and then assess it as it comes together. That's what the job of the Sharia scholar is. So hence all of this is quite relevant. I'm not going to spend too much time on this. Now you have the miner, he mines, he identifies that puzzle, he solves the puzzle, and then he verifies the fact that it should be loaded onto the network. So now it's part of a node, it's a node that is legitimate and now actually gets logged on to the blockchain decentralized ledger.
Okay.
And now it can form any one of the currencies. It could be a Bitcoin, Ethereum, Litecoin, whatever it might be. And they would follow similar methodology. Some are slightly different. An example of this is Ripple. Ripple, of course, is not decentralized as the others. Ripple uses a centralized technology, which means that it can be managed or controlled by a government per se. Bitcoin might be spread all over the world very easily, but something like Ripple could actually be managed through a single government. Okay, so significant differences between the two. Tracking the price movements, again, this is quite relevant when we look at the Sharia opinions later. So if you look at the movement of Bitcoin in particular, you'd find that it was significantly stagnant and stable until about the beginning of 2017. So from 2017, everything went through the roof, and things seem to have kind of stabilized, range bound at the moment, at the end of 2018. We'll talk a little bit about this as we go along. So now briefly, what is the Islamic perspective on cryptocurrencies? I know you're itching to ask that important question, is it halal or not?
A lot of people want to know.
So it's important that we do not just provide an answer, we actually provide the logic behind it.
The understanding.
The understanding is crucial. And here we find that there are three particular dimensions that we actually look at from the Sharia verdicts that have been considered. So first of all, what is the nature of the underlying contract? From a Sharia perspective, this is usually the first thing we look at. What is the actual underlying contract? Is it legitimate in the Sharia? Now, we have to assess whether cryptocurrency is considered as mal or wealth. This is one aspect of it. So you find that scholars go into a lengthy debate about whether cryptocurrency is mal or not. Now, for it to be mal, it needs to have complied with certain rules. What I've done is, in the slide, just summarized for you what all the schools have said. The four major schools and other opinions have actually stated as what can be recognized as mal. We don't have the time to go into the detail of the evidences of the dalail, but in summary, all schools agree that in order for it to be considered mal, it needs to fulfill the following attributes. It needs to have some sort of commercial value. Now, commercial value meaning it needs to be recognized by everyone as having X value. Now, everyone, not everyone in the world, but everyone dealing in that. So for example, you have art, and one might say, I think my 5-year-old could have drawn a better painting, but someone decides to buy it for $450 million. And the market recognizes that as the value of that art piece. So there is a commercial value assigned to that art piece. Similarly, there's a commercial value assigned to cryptocurrency.
So there must be a marketplace for it. There must be a market that recognizes a value of something before it's considered mal.
Precisely.
It is not the, so let's say in the analogy of the painting.
Yes.
So I do what I think is a brilliant painting,
yes,
but the market does not think the same. So how then does it qualify as?
Right. So unfortunately, if one of the attributes is commercial value, which means market value, then one might argue that in the eyes of the market, it's worthless. You might feel quite sensitive towards that, I know, but unfortunately, we've got to deal with what the community decides as the value of the asset.
Very clear.
Okay. The next issue is that it needs to be capable of being owned and possessed. So it must be able to be, with all ownership risks, it must be able to be held by someone. Ownership or qabd in Islam really refers to the fact that if it is destroyed, then the person who owned it will suffer the loss. So as an owner of, yes, so as an owner of the asset, that is what is recognized as the fact that I can actually own the asset. If it's lost, I feel the effect of it.
So this is the fundamental premise of whether something is an asset.
Yep.
Okay. So if I don't feel its loss, in essence, it's not worth anything to me.
Well, it might not be worth anything to you, but it might have commercial value. That's another very deep Sharia discussion. Okay. Let's try and avoid that.
Sure.
Just keep me on track.
Sure.
Okay. So yes. So for things to be owned and possessed, we identify whether that loss is significant or it is material, and that is recognized by the owner and the market itself. So the market recognizes as well that you've lost something. Okay. The next part of ownership is that it must be, or mal, is that it must be transferable. Okay. So if you want to call it mal, then you must be able to transfer it to someone else.
Sure.
Through sale, donation, gift, etc. It must be able to be stored. Okay. And it must have beneficial value in the Sharia. Now, this is a very important concept, because if you have a wine cellar in your basement and you own very old wine or antique wine, and the market has valued that at millions of dollars, from the Sharia perspective, it means nothing, because it is not valuable in the eyes of the Sharia. So this is a very important concept. Now, some of these attributes, you can have a look. I put in a quick reference there of the Majallat al-Ahkam al-Adaliyah, article 126, that you can look at the attributes of what is considered mal. So there is a lot of debate and discussion of mal, but these are what all the schools have agreed to be considered as the attributes of mal. And when we actually assessing cryptocurrency as mal, we will look at it against this.
Okay. So this is a clear consensus among all the scholars?
No, there's no debate on this issue. Okay. But now, even though it is mal, is it asset, security, commodity, currency? Meaning, what type of mal is it? So we might agree that it's mal, perhaps. But have we agreed on whether it is asset, security, commodity, currency? That is another debate. Okay. Let's go on very quickly. Next, it needs to pass the Sharia filter of permissibility. And finally, it needs to ensure that it complies with the objectives of the Sharia, so the maqasid of Sharia as a whole. The maqasid, this is an umbrella group of objectives that don't determine legitimacy right at the beginning. First, you must apply the rules. Then you look at it from an overall perspective of maqasid.
Yep.
Okay. Unfortunately, we find today that we get overwhelmed by applying the objectives first and then looking at the rules later. Okay. The rules should be applied first before you actually look at the maqasid. So in summary now, many scholars have provided opinion. Some prominent scholars have provided opinion, but certainly not as many as we have expected. We have, tried to inquire from the bigger authorities like the Islamic Fiqh Academy, and they have said that they are in discussion and they have not provided opinion as yet. So the final consensus amongst those scholars has not been provided as yet. So here I'm not giving you my opinion. I'm providing you with the opinions of the scholars of what has been already documented. So you find that scholars are primarily divided into three when it comes to the opinions on cryptocurrency as a whole. Some say halal, some say haram, and some say, well, exercise caution. So completely permissible, impermissible completely, or in between. That means it's permissible, but exercise caution. Try and stay away. Be careful. Okay. So let's just quickly talk about, unless you want to ask the specific questions later, or would you like me to just cover the reasoning behind?
Yeah, I think we can go through it. No problem.
Okay. So some of the reasoning behind those that say it is legitimate, it's permissible. They say, number one, what is required for currency to be legitimate in the Sharia according to their evidences? And as I say, we don't have the time for all of the dalail. But they say it should have istilah. Istilah is social concurrence, meaning you and I and the market agrees that this currency or this crypto has value.
Okay.
And we agree that the value is X. So we all agree to trade this currency or use this currency at X.
So sorry, as long as there is a market, it means that people assign a value to it, right?
Precisely.
Okay. So there's the manifestation of acceptance of something.
Exactly. And also what it has done is through istilah or social concurrence, then and ta'amul, meaning practice, what happens is you quickly tick off the attributes of mal. Because now you realize quickly that yes, it has been recognized to have commercial value.
Yeah.
It can be possessed. It can be transferred. Now the question will be, is it permissible in the Sharia? Okay, so we'll come to that.
Sure.
So through this argument of istilah, social concurrence, and the fact that it's through ta'amul, through practice, it is permissible, the scholars that argue that it is permissible say yes, as a store of value, as mal, it's allowed. But even they argue that we need to differentiate between mal as a store of value and currency as a medium of exchange. So whilst the scholars that say it's permissible say it's allowed to be considered mal, many of them still say, hold on, we don't think it's currency. Okay, so we'll come back to those and the issue of currency. For those that say it is impermissible, prohibited, they say, well, first of all, it's not currency. It's not currency according to them because it's not legal tender. Now, that is highly debatable amongst the academics and the scholars, because was legal tender a requirement for currency in the Sharia in the first place? Okay, legal tender is an introduction of countries within national boundaries.
Yep.
So it's the central bank that determines legal tender. Before that, who determined legal tender? It was the market that had determined legal tender.
The people.
The people. So if one goes through and says that the argument is based on legal tender, one has to be very careful, because are we looking in just a 200-year window, a 300-year window of legal tenders? Because prior to that, we didn't have any legal tenders. So one has to be very careful in using that argument. Nonetheless, there are a large group of scholars that say it's not currency because it's not legal tender. They also say it's highly unstable.
Yeah.
So now that is a real argument. We know that it's highly unstable. And they say because of its instability, it should be considered prohibited. But they don't stop there. They say not only because of that, but also because it funds terrorists.
Okay.
So one or two scholars have stated officially that cryptocurrency funds terrorism. Of course, we expect them to provide evidence for this.
Yeah.
And it is now, the responsibility is on them to provide that evidence. But yes, this is what they have stated. We are unaware of particular evidence of such funding of terrorism.
I mean, in general, the assumption would be that it would be used, but there's no evidence.
Okay, exactly. Yeah. So there is assumption, and as we say, when you make assumptions like these, one has to be very careful. One has to provide evidence, before. But then they could argue that in the Sharia, you have a tool in usul al-fiqh called saddu al-zari'a or saddu al-zara'i. In saddu al-zara'i, you block the means to evil. Now, blocking the means to evil means that for a group of scholars, particularly those that consider the Maliki and the Hanbali schools of thought, they might say that the probability, even if the probability is low, on the lower end, we will still stop the evil from taking place. So as you said, there is the assumption, the potential for this to be used for funding terrorism. Hence, some scholars say it's disallowed, and if you look at the usul behind it, they might argue that it's saddu zari'a, or blocking the evil, or blocking the means to evil from the beginning. Like if you know there is a murderer, do you sell him a knife? Do you give him a gun? Of course you do not. So in this instance, that is the argument of some scholars. All right. The other thing is that trading digital currency, according to those that say it's impermissible, they say, well, if you trade digital currency, then it is very similar to trading currency. Okay? And if it's the same as trading currency, well then currency has specific rules, very clear rules on how you can trade them, and that will fall under the grouping of bay or sarf, the rules of bay or sarf. So they will argue that as long as you follow bay or sarf, you'd probably be permitted to do it, but if you can't follow bay or sarf, then you cannot be. And bay or sarf requires that there is no deferment, it must be instantaneous, it must be at a spot rate, etc. So as you can see, the arguments of those that argue impermissibility, okay, have to provide evidence for that impermissibility, okay? And a lot of that has been based on doubt. A lot of that has been based on uncertainty, or the fact that this currency is unknown, it's new, it might cause harm or destruction in the future, and therefore the opinion was, let's stay away. Okay, let's quickly talk about those that say it's in between. They say it's allowed, but exercise caution. So here you will say, you will see that a fair bit of scholars, and although I've named just one or two, they've linked them to a pyramid scheme. Okay, so scholars have said if it's not linked to a pyramid scheme, you might argue permissibility. But if you pick up fatwa, verdicts, legal verdicts of those that say it's impermissible, they've also said it's a pyramid scheme. Now, one might question, okay, are all cryptocurrencies pyramid schemes? And if you investigate them, you realize, no, they are not necessarily pyramid schemes.
There may be a few.
There may be a few. So you will have to read, and this is the point, you must read these fatwa very carefully. These verdicts are actually in referring to very specific coins, like OneCoin, that have used multi-level marketing to actually promote their product. And when it comes to that, then there are pyramid schemes, and that would not be legitimate. Okay. Other scholars have talked about excessive gharar, and they've said, you can argue that cryptocurrency is mal, you can argue that it can be traded, that it can be considered as a store of value, but if you want to trade it, gharar is too high. Gharar or excessive uncertainty is too high. Now here they might have a legitimate argument. Sheikh Abdul Sattar Abu Ghudda, for example, one of the most prominent scholars on Islamic finance in the world today, states that you need to consider gharar. And we know that the price fluctuates. 2017 saw a 1,500% increase in Bitcoin value, and then a sudden drop in early 2018. And today it hovers around the $6,000 mark. And many people say, no, it has stabilized.
Sorry, can you go into this a little bit more?
Yeah,
because
sure.
this is, I assume a lot of those who are online listening to us right now are interested in the trading part, because some of them may already have made money, some of them may have made losses, some of them know friends and people who have made a lot of money, and they're looking at whether they should invest. And later on also we'll talk about exchanges, not just halal exchanges and stuff like that. So you mentioned the trading, the gharar itself is a feature that can make something impermissible, right? But for the layman, I mean for the Muslim who's not familiar with this concept, what's wrong with gharar? I mean, I'm taking a risk.
Very good question. Islam recognizes risk. In fact, risk is the fundamental proof of something being actually legitimate. We have the principle called al-kharaju bil-daman. Al-kharaju bil-daman comes actually from a hadith narrated by Sayyidah Aisha radiallahu anha of the Prophet sallallahu alaihi wasallam. And what it refers to is profit follows responsibility. It means if you want to make a profit, if you want to make money, you must have some skin in the game.
Okay.
You must expose yourself to the loss as well. You can't just be making a profit. So we know that if you want to make a profit, you must be exposed to risk. You must be exposed to the uncertainty, in other words. So how then is gharar impermissible? Because gharar is uncertainty, or loosely translated. However, risk in itself makes a transaction more legitimate. In fact, it adds that element of Sharia to it, which we are now just established through the hadith. There are many other supporting evidences for this. I won't go into that. But gharar is a particular type of uncertainty. It is an uncertainty that could have been calculated, but was not calculated, or was excessive because we could not calculate it. So if you want to understand something, if you look at the Quran is quite explicit in the type of risk. Yaqub alayhi salam is telling his sons, when you enter Egypt, enter through different doors, chapter 12, verse 67. Enter through different doors. Why? So that if someone captures one of you, the others could come to his assistance. We call it, don't put your eggs in one basket. Right? We know the famous hadith of the Prophet ﷺ, where he commands the Bedouin, or he suggests to the Bedouin, tie your camel, then trust in Allah. Now, what we are talking about is not tying your camel. Meaning, whilst you have the opportunity to look at this transaction and know that it is truly volatile, you still enter into it, and you know that the gambling nature of it is so high, the uncertainty is so high, that it far outweighs the certainty. Okay? That type of transaction would definitely be impermissible. And that is the gharar that we are talking about here. Things that are fluctuating such that it could cause you massive loss, and you're getting into it as if it's a zero-sum game. That means one party wins and one party loses.
It sounds like you're describing Bitcoin.
Well, I was trying not to. I was trying to.
But what's the argument against this?
Well, the argument against this is that, is this risk not just business risk?
I see.
Every asset that you enter into has a similar risk. You do not know exactly what price it will end up at. If you knew, then everyone would be millionaires or everyone would be poor, because you would not be able to make a spread of the original price versus the new price. So those that argue against it say that, no, this is pure business risk. This is what it takes to when you enter into this type of risk. Okay. In fact, they say that since risk follows responsibility, the higher the risk, the higher the gain, the higher the profit. So if you want to expose yourself to more profits, then you have to expose yourself to more risks.
Understood.
Now,
have a drink first. We'll have some questions and answers in a short while, right? For the participants. So if you have any questions so far, write it down. And in a few minutes, we'll start taking some questions. But there's a lot more I want to hear from Dr. First.
So, well, just one or two additional points to make. Those scholars that have said it's impermissible, they've said that it might not just be funding terrorism, but it might be used by the underworld, by the criminal, the gangs, to actually transfer money. Because we know that cryptocurrency has a unique attribute, and that is it's borderless.
Yes.
And because of its borderless nature and its anonymity, so-called anonymity, there is an understanding that no one really knows who owns the Bitcoin.
Yeah.
Of course, that may not entirely be true, okay? Because a lot of registration takes place at an exchange in order to own a cryptocurrency. But of course, if you know how to come around the system, you can come around the system.
Yep.
So when you look at these types of accusations that cryptocurrency may be used to fund the underworld by criminal gangs, then that may be an argument, because we actually, at the end of the transaction, do not know who purchased the asset and how they have laundered their funds. We have proof or evidence that has been reported already of criminals utilizing cryptocurrency, but it has not been any more than those using US dollars or British pounds or ringgits to launder their money. So if one were to say cryptocurrency is exposed to money laundering, then the opposing argument would say, well, why are you dealing in any other currency? All currencies are open to exactly the same type of money laundering risk. So that's another argument that is brought about.
Okay. I'm just thinking, there are so many different types of cryptocurrencies with so many different features.
Yeah.
So the points that you shared earlier, the different opinions and different justifications,
yeah,
I think it would be difficult to apply a blanket application to all the different types of cryptocurrencies. So how then do Sharia scholars look into this?
Absolutely. So these are just the initial opinions provided when cryptocurrencies did not exceed 600. Now we know they exceed 1,700. So they move very quickly.
Yeah.
And cryptocurrencies evolve and they change in the type of opportunities they present. Now, where Sharia scholars will have to go back to the drawing board, perhaps, is look at cryptocurrencies that actually have underlying assets. Because those that have underlying assets actually will have a different approach in terms of Sharia opinion making.
Okay.
Because one example is Sharia currency or cryptocurrency that has an underlying gold asset of a specific weight. Like we know there is a popular, I don't want to name that currency, but there is a particular currency that has gold as a backing. If you go to Africa, you will see another cryptocurrency that is becoming popular, and that is on coffee. Now, if you look at these commodities, coffee, gold, airline tickets, travel agencies, real estate, and now waqf, of course, you will find that the underlying asset is quite legitimate and perfectly Sharia compliant. The token that is created from the Sharia compliant asset, if it complies with the standard rules of Sharia, meaning linked to the underlying asset, then the opinions will have to be around those attributes. But we also find tokens that are not directly linked to the underlying assets. Basically, we become aware of tokens that you actually buy and invest in, and they are used as coins to purchase underlying assets.
Mm-hmm.
But when you look at the marketing, it looks as if you are actually purchasing the underlying asset when you purchase the token. Mm-hmm. I hope you understand the difference here. Buying the token does not mean buying the asset, but the marketing of the token is such that you are actually directly buying the asset. Mm-hmm. Now, when you look at that, again, the Sharia verdict will be different, because now the token's not linked to the underlying asset. Tokens will now be generating value based on the demand of the token and not the demand of the underlying asset. So an artificial value created of the token based on supply and demand of the token, not actual real value of the asset. So these are just at the beginning. There are so many different tokens coming up. I'm calling them tokens, cryptocurrency, that we would have to be very careful in providing blanket statements of all cryptocurrency. Absolutely agreed.
I have one last question, maybe before we go to the questions from the participants. We see today, I see a trend, an early trend of two, I think there's three now coming up, cryptocurrency exchanges that are only for halal cryptocurrencies. So let's say halal, since not everybody agrees that it's halal. Is that a good trend? Will this create value for people so we know, or will it create more confusion? Add-on question, maybe what we need from Sharia scholars is some sort of guidelines so we can also, the public can have access to those guidelines, because it's not possible to get every single Sharia verdict on every single cryptocurrency. Yeah. What do you think?
So on the first issue of exchanges, I think that's an interesting development. The challenge is going to be, there are going to be Sharia scholars that will legitimize that exchange, whilst others might not. Mm-hmm. So the fear is that it might create confusion, but then, of course, confusion will always be there. The point is that we need to continuously develop and evolve such that we are looking at different opportunities in different ways, because exchanges are already rampant. We know of a number of exchanges. If we do not have a marketplace that offers halal, then we are kind of defeating the purpose of offering Sharia-compliant assets and Sharia-compliant offerings. Mm-hmm. So it's a good development. However, it's by no means a perfect development. It's a development that needs to evolve and be enhanced through Sharia opinion and guidance, as you've stated, such that that exchange is offering what is widely regarded as being Sharia compliant. Mm-hmm. On the second point, I think that is the most crucial point at this stage. It's impossible to provide an opinion on every single currency. There are simply too many out there. Yeah. The best approach would be for Sharia scholars to quickly provide a guideline on the approach of cryptocurrencies. Mm-hmm. You will still have cryptocurrencies that will fall out of the guideline, but then those guidelines will continuously be improved and enhanced. Yeah. So we have to move with the times very, very quickly. And here we would appeal to the major authorities like IOFI, Islamic Fiqh Academy, the SAC of BNM, Securities Commission of Malaysia as well, to consider issuing some preliminary guidelines on the permissibility or the way we would look at cryptocurrency to determine their Sharia compliance.
Yeah. So at least in that case, we know if these attributes are present, then it's clearly haram. So yes. You know what are the red flags to see whether something's halal or not. And then maybe some parts are more unclear.
Exactly. So for those that are clearly prohibited, if you have a guideline, at least you now reduce your pool, and now you can analyze more deeply the ones that have passed the basic Sharia filter.
Yeah.
That is the point.
All right. Thank you so much, Dr. Alhamdulillah. It's been very, very enlightening for me. I assume it has been the same for you also, inshallah. We have about 15 minutes left, 10 minutes, I think. So 15 minutes, yeah. So inshallah, we can take about 3 to 4 questions. And these are the questions. First question, let's see which ones were not covered so far. Just for everyone to know, it is being recorded and it will be available. We will share the link with everybody who has signed up. Anyone in particular? Let's see.
So,
all right. So one question, please keep the questions coming, because we will choose the good ones, inshallah, the ones that we feel will add value to everyone. There's one here that we sort of touched on, But maybe we can answer this one again, the one right on top. So I'll repeat the question.
Please.
Even for cryptocurrencies that are allowed by scholars or that are endorsed as Sharia compliant, does the fact that people are short selling them or speculating on them make it haram?
That's a very good question. So there are two aspects here. First of all, short selling and then speculation. So speculation does not necessarily require short selling. Okay, so we must just very clearly articulate here that speculation in itself may not be impermissible. All right, but excessive speculation, when there is no fundamental analysis and you are simply speculating to artificially increase the price, or you're speculating without any funds available to support your transaction, and you're hoping that the price will go up and then benefit from the spread, well, then that type of transaction is going to create a lot of uncertainty in the market, aka 2007-2008 financial crisis. So that would be impermissible, excessive speculation. Short selling, now short selling when it comes to certain types of assets and commodities is permissible. Now, be very careful on what I'm saying here. Short selling is not necessarily your margin selling. Short selling can be defined differently. Let's look at it from a real estate perspective, where an agent actually is given permission to sell an asset on behalf of someone else. Now here, the person wants to provide commitment to the agent to determine that yes, he will definitely buy it, and he provides a deposit, and then he comes up with the money later. Now, that scenario needs to be differentiated between short selling on equities and short selling on cryptocurrency. Okay. So short selling, a lot of this has to do with margin selling. Basically what you do is you put in a 5% and you take a position on the cryptocurrency expecting it to rise and benefiting from the spread of that appreciation. If it doesn't appreciate, well then you forego your short sale. Now there are slightly differences of opinion here. One says that you can utilize a wa'ad to secure a short sale in this way. Through a promise. So a promise and through a commitment fee of an arbun. Other scholars and a larger group of scholars state that this is not a permitted way to do the transaction, because you are taking a position on the asset for a future price that might not ever occur, creating speculation and uncertainty in the market, and the market is not ready for this type of uncertainty. It creates too much of volatility and instability, and in the long run, it's not good for the market. So this type of short selling, those scholars argue, would be impermissible. When you look at a product like cryptocurrency, when there's argument and debate on legitimacy, and then you go on something which is doubtful, like short selling on the crypto, then you're building from one doubtful element on another doubtful element. So one has to be very careful on considering if this is the right path to go down. Okay?
Okay, understood. All right. There are other questions here. One question on crypto exchanges. We talked about that. Yeah. Oh, sorry. Yeah.
Well, my dear friend from Mauritius has asked, dealing in cryptocurrency could be very dangerous, but there are no regulatory and Sharia standards.
Yes.
Well, in fact, countries have regulatory standards. Some countries have already started with regulatory standards. Whilst it is really nascent, it's very new at this stage, we do believe that as the market develops, more regulation will come in. But then we've got to ask, does this not defeat the purpose? Cryptocurrency was developed in order to avoid and sidestep regulation to open the market to the people, and then we say there's no regulation.
Yeah.
So what do we want? Do we want cryptocurrency, or do we want standard national issued currency? Because it seems we can't easily have both. Yeah. If you want regulation on crypto, then you're falling back into the original currency that we already have.
There is a natural conflict between the two concepts of regulated currency and cryptocurrency. The whole point is for it to be free. Right? It's some kind of anarchist dream, maybe.
Exactly. And then, with freedom comes responsibility. Yes. Unfortunately, man is yet to determine that balance between freedom and responsibility. We say freedom of expression, and then he goes on and insults everyone else. Yeah. So there has to be this freedom of expression, yet responsibility in exactly what you're saying. And cryptocurrency falls in the same way. But agreed, there are no clear Sharia standards on cryptocurrency. So therefore, one will have to exercise caution in the beginning. And one will have to be very brave in entering into cryptocurrency and assuming that he understands the necessary Sharia parameters behind it before entering into it.
All right. So far we have explored the perspective of investors and traders, people who want to buy cryptocurrencies. How about those who, let's say, technology founders, startup founders who want to raise funds through cryptocurrency? So they start exploring all the different opinions, and from there, they feel that they can come up with something that fits into what most of the scholars believe should be fine. For example, let's say Ethis itself, we have real estate, we have assets, and we want to link our crowd to our assets through a cryptocurrency or crypto asset that represents the real estate asset. Would it be a good time to do it now, or is it still too early and still too unknown? Should we wait for more maturity before we explore whether Ethis or anybody out there? Should we explore this when it's more mature, or is now the best time to push, push it to its max?
So, having been involved in the unit trust industry for the last 22 years, I tell you that this is nothing new. It's just different packaging. In other words, if you look at the mutual fund industry or the collective investment scheme industry, all that takes place there is that a group of shares are valued using a net asset value calculation every day to determine what is a unit value of purchase into that investment. All you're saying now is, I'm going to take that unit and convert it into a token. So I'm saying it's nothing new. So therefore, if it's nothing new, then there is no need to wait. You could enter into it right now because it should be differentiated from other cryptocurrency out there. Because this is something which has been well founded, has been well traded, is well known in the market. All it's doing is it's creating an additional form of legitimacy to the collective investment scheme industry by saying that we recognize it as part of the blockchain. So all you're doing is providing additional credibility, in my opinion. So I would have no issue in looking at a token that is represented by a unit value calculated because of the value of the underlying asset. So it's just a representation of a share of a token value of the underlying asset. That's exactly what's happening right now, and I don't think there is any issue in simply creating a currency to represent that value.
Okay, understood. Let's see, any more interesting questions that we can address? So one question here, the last one, Doctor. Even if crypto, before that, sorry.
Yes.
Yeah. Even if cryptocurrencies become permissible, will it make return of investment from the currency permissible? This is quite a confusing question.
Perhaps what you meant was, even if cryptocurrency is permissible, will it make return impermissible?
Yeah, I think so, yes. No, he said if the currency itself is permissible, is the income
the return on the investment.
I would assume so.
Well, if you're holding cryptocurrency and if you're holding one Bitcoin, for example, well, whatever is the value of that Bitcoin when you want to trade it or purchase something with it is what you're going to benefit from or not benefit from based on the value. So I don't think that we need to look at it from the perspective of the questioner. One has to look at it from the value of what you've purchased. If you've spent $6,500 buying one Bitcoin today, well, then you've committed to $6,500 worth of Bitcoin. Next year or 1 month from now, whatever is that value is the value that you hold. You don't hold $6,500 worth of Bitcoin a month from now. You hold whatever is one Bitcoin value. So that is irrespective of how much you've spent. It's going to be the market that will determine what your Bitcoin is valued at. If you want to call it an investment, that's fine. Some simply call it a medium of exchange or a currency, and that's also fine.
Okay, all right. Maybe one last question. Please elaborate regarding Hajj in current. Hold on, let's see which ones are good. I think these are the last two ones.
Okay, from our Sheikh from India, decentralized currencies can be allowed from Islamic perspective. If yes, if there is any example in Islamic history. So this is a good question. because it allows us to go back in the history. The answer is not a quick answer. Why? Because the Islamic Empire was only originally from a single Khilafah. So if we understand how it evolved, and I don't have to go through the history of from the Khulafa ar-Rashidun to the Abbasids and the Mamluks, and I know that you know this history very well, you will find that very quickly our centralized approach of issuing currency had split into decentralized empires. Mm-hmm. So we had a governorate in Baghdad, and then we had an opposing governorate in Egypt, okay? And we know this in the time of Salahuddin Ayyubi, around the 12th century, this had already taken place. And then if we go further in history, we now know that there was a disconnect between the Moorish Islam, or Morocco and Cordoba, and the empire way back in Iraq. So if you ask, is there an example? I mean, these are all examples of decentralized issuances of currencies, because each of these little governorates had their own khilafats, had their own khalifs, had their own amirs, and they were busy issuing different coins. So from this we know that it is possible to issue different coins from different parts of government or different parts of nationalities, I mean, as we have today. So if you're asking, do we have an example of decentralized? We say, yes, we have many examples of decentralized scenarios where coins were simply being used as an accepted form of currency throughout the North African region in the 10th and 11th century, but were not issued by any particular government.
Oh, they were not?
No. Okay. And simply because the Islamic Empire had gone way down into West Africa, into countries like Ghana and the Ivory Coast, where they were minting coins. And those coins were not necessarily of any particular governance, but they were of a particular weight, and they were valid as mediums of exchange. There were restrictions, particularly on paper money being brought in from China and being printed in Egypt using papyrus reeds. So there was a restriction on those. But when it came to coins, coins could be valued because you would know how much of gold is in a coin, and you could weigh those coins, and that would form the most legitimate part. Yes, there were those that were stamped, etc., and they were coming from the governorate, but there were many that were not. So this, because you could not even control it anyways. So there were many examples of this scenario in the past.
All right. So it's nothing new in that
sense. Nothing new in that sense.
All right. Alhamdulillah. Okay. We have come to the end, I believe. Yeah, alhamdulillah, exactly on time.
Subhanallah.
MashaAllah. To the minute. So just a few things to share with everyone. Firstly, of course, thank you so much, Dr. Ziyaad.
You're most welcome.
For sharing with us. And, I know there's a lot more, and you had to squeeze everything into 1 hour. But alhamdulillah, I hope it has been very beneficial to all of you the way it has been beneficial to me also. Alhamdulillah. And what I'd like to share here are a few short announcements. There is a forum that talks about Islamic fintech called forum.islamicfintech.org. So you can post questions there, and we will also try to accumulate some of the questions and get some answers and post it there also. Right? There will be a recording of this, and we will send a link, an email to all of you who have registered, so you can watch this again. Feel free to spread it and share it to everybody you know, because the whole objective of this series is to spread knowledge, and knowledge should be freely spread. Alhamdulillah. And the last point that I want to share is that we will have a webinar every month, and every month we'll have a different guest speaker, and sometimes internally from our own team, and sometimes from our friends and our partners like Dr. Ziyaad, alhamdulillah, who's taken the time to be here today. So every last Wednesday of the month, we will have a webinar, inshallah, and we'll have a series of different topics that we believe will add value to you and be interesting to you also, inshallah. There were a few questions there that we didn't have time to answer, but I just wanted to ask one question, because a lot of people ask me about this, and I always tell them I don't know. I can help you ask the question. So the question is, does currency, general concept, the concept of currency in Islam, does it need to have an asset backing it for it to be considered a currency? Does it need to have an asset, or can it just be a currency like the fiat currency? It has no asset. Some people feel that is contrary to what it's supposed to be.
The Islamic Fiqh Academy ruled in the early 80s, all the way back in the 1983-85. You will find also resolutions in 88 that state that fiat currency is a legitimate form of currency in the Sharia, and it should be treated the way gold and silver is treated, meaning it becomes a ribawi item. And the actual result of that is that fiat currency now will be also applicable to any rulings of zakat and inheritance. So which means that we know fiat currency has no underlying assets or underlying values. That gold standard was scrapped in 1970 from the Bretton Woods Agreement.
Yep.
So now we have currency that is based on a particular calculation of money supply, etc. And it's an elaborate calculation. And the Sharia scholars have generally accepted this as a legitimate form of currency with no underlying asset. So it's not my opinion. I'm telling you what the fatwa is from the Islamic Fiqh Academy or the Majma' al-Fiqh al-Islami. They have considered it permissible to be considered as currency, even though there is no underlying asset.
Okay, I understand that, but if you bring that theory, that concept, or this the asset, the issue of having an asset or not, to the cryptocurrency world, then does it apply in the same way?
Well, if you consider crypto as currency, then one cannot argue that it must have an underlying asset.
Oh, you cannot. Right.
If it has an underlying asset, then you don't need to argue around currency because it's a representation of a share of the asset.
Yeah.
Okay. But if you want to argue whether it's currency or not, then you shouldn't be arguing whether it has underlying asset or not.
I see. All right. I think that's quite clear.
Okay.
Thank you so much. Thank you, everyone. Inshallah, we will may have more sessions with Dr. Ziyaad in future.
Inshallah.
There's a lot more topics that we want to go through also. So
Inshallah.
Thank you again.
Jazakallah khair. Thank you very much for having me on. Jazakumullah khair.
Assalamu alaikum warahmatullahi wabarakatuh.